You are listening to Mobile Payments Today podcast. One newsletter brings you the world of money. The World of Money newsletter is a skimmable daily summary of payments and financial technology news from around the globe, covering trends and technologies in banking, fintech, transactions, blockchain, security, mobile, and more. Sign up now at worldofmoney.com.
Hey everyone, and welcome to episode 11 of the Mobile Payments Today podcast. I am your host and the editor of Mobile Payments Today, Will Hernandez. So a little bit of a disjointed episode for this edition. We actually are publishing this a couple of days later than we usually would, and while that gave me some time to try and secure someone to make up for the two potential guests that fell through the cracks last week, it just wasn't meant to be. So instead, I'm going to have a longer breakdown of our Bank Customer Experience Summit that happened in Chicago about 10 days ago. But before I get to that, there was one interesting news item that came out last week, and that was the fact that Stripe is introducing a mobile point-of-sale device to the market. And basically, and what you're about to hear is some of the stuff that comes straight from the press release, is that Stripe Terminal, it's an MPOS product that enables online businesses and platforms to accept in-person payments with Stripe, and that was according to the press release. And there are three components of the Stripe Terminal, and one of them is a set of SDKs and APIs for creating a fully custom checkout experience using web or mobile apps. The second part is obviously the card readers from Stripe's hardware partners, BBPOS or Verifone, which are pre-certified to Stripe's global processing platform, ready for that quick chip EMV and contactless payments. Obviously, contactless payments are talking about contactless cards or any of the major pays, and that is all set out of the box. And the last component of Stripe Terminal is software for managing and monitoring connected devices across multiple locations or connected accounts right from the Stripe dashboard. And I don't think anyone is surprised Stripe did this, and that was the indication I got from reading some of the more in-depth coverage about this. Stripe has carved out a nice corner for itself in e-commerce, so why not try to capture some brick and mortar spend? And it seems like some of the merchants that they're going to be targeting with this are more niche areas. And one of the areas I thought was interesting, one of the initial partners is the eyeglass shop that only has more of an e-commerce, and their name is Warby Parker Moore, made itself a name through e-commerce in terms of glasses, and now they have little shops here and there. So that seems to be the type of merchants that Stripe is going to be going after. But I think the more interesting aspect of this right now is that Stripe is finding itself in direct competition with the likes of Square. And if you're a small to medium-sized business, you have a lot of options right now as far as accepting traditional and digital payments in store. You have Stripe now, you have Square, you still have PayPal, which actually does have an MPOS device that you rarely hear about anymore these days. And I think going forward, and this has been the case when Square started to really push out from just payment acceptance, is what's going to differentiate these offerings down the line are the ancillary services from each of these companies. Now, again, like I said before, it seems as though Stripe and Square are going after different types of merchants, and it seems like Square wants to get bigger merchants now involved. There's going to be some competition there between the two nonetheless. So keep that in mind as we go forward. That's going to be interesting trend to watch in 2019, I believe. So that's going to do it for the news this week. Stick around for my BCX impressions, and I'll be right back after this quick break.
World of Money informs professionals in the financial sphere and end-user markets about trends, technologies, and ideas shaping the future of money and payments. Sign up for the free newsletter now at worldofmoney.com.
and welcome back to the Mobile Payments Today podcast. So, like I mentioned last week and in the intro, I wanted to recap our latest Bank Customer Experience Summit and relay some of the key points from my time in Chicago last week. And believe it or not, this was our sixth one of these overall. The first three were actually under a different name, the ATM and Mobile Innovation Summit. But 4 years ago, we decided to take that summit in a completely new direction, and we decided to focus on the customer experience as it relates to banking. This was our third summit under our current name, and myself and ATM Marketplace editor Suzanne Clucky start putting together the agenda in December and January. So I'm intimately familiar with some of the panels because I actually created 4 of them, and Suzanne creates 4 of the breakout panels, and then we go about identifying people to come be a keynote and things of that nature. So when I was thinking about how I want to recap this particular summit, I wondered whether I would have this more written out or just have a general outline and shoot from the hip. I've done both for this podcast, believe it or not. So what I decided to do here was have a general outline and basically shoot for the hip. So fair warning that I might be all over the place right now. So the first thing I wanted to address was just competition and how the competition is not coming from the bank down the street anymore, and that it's actually coming from other digital companies. And what we're seeing is that when consumers have these digital experiences with an Uber, with a Spotify, with a Starbucks, and even a Tinder, I'll get to that in a minute, they expect to have these types of interactions anywhere they go, and that includes banking. And one of the things that I thought was really interesting, and there are a few things that I thought were interesting about this particular topic, was that one, our keynote speaker, and I'm not even going to attempt to try to say his name again, I'm just not going to do that, but he said how this millennial generation, and I'm borderline millennial at 39, turning 40 in 4 months, born in 79, so I think I can speak to this. But we're at a point where a lot of us, and even other generations as well, we expect things to happen at the speed of Google. Basically what that means is we type in a search, hit the enter button, and we expect things to happen that quickly. And that's really true. That's becoming the norm really for a lot of people. And when you look at the generations now, millennials, as particularly Gen Z, this is the kind of customer experience that they expect. And you think about just the things that you can do from your smartphone, sitting on your couch, whether it's shopping, whether it's ordering food, whether it's watching content at an instant. It's all there right now. And then these are the type of experiences that people expect. So what's happening now is these banks are looking at what these other companies are doing as far as the digital experience is concerned, and basically molding their digital experiences based on an Uber or a Spotify and a Starbucks. And the reason why I think the whole Tinder thing is funny, because if you would have told me a couple of years ago that a bank was determining their digital experiences on Uber, or on Tinder I should say, I would have thought you were crazy. But there's something about that instant gratification on Tinder, unfortunately, that people are addicted to. And again, if you kind of take that mindset of addiction, as bad as that sounds, and apply it to a mobile banking app per se, where that person has to check that mobile banking app every single day because they want to keep tabs on what's going on as far as their account is concerned. I can see that. Gamification often comes up when it comes to that, and to some people, Tinder is like a game. So if you're enticing people to check their mobile banking app every single day, maybe twice a day, I can see how you can make that link between Tinder and mobile banking. So this is something we're going to see again, I believe, going forward, especially as you look at things like Amazon trying to get into banking, trying to get into financial services. And if you ask some people, they're already there. So again, it's going to be interesting to see how competition has changed here in terms of how banks look at other services. So the other thing to look at here is just AI and what exactly is that going to do for banks and for the customer experience. And I remember maybe a couple of years ago when the thought of AI started to creep more into the conversation at a lot of conferences that are out there, particularly when you look at a Money 2020. I don't think people really understood what AI was supposed to be and what it was supposed to do as far as banking was concerned. And if you follow certain people on Twitter, that still might be the case, but I think less and less we're seeing that because I think people understand what's going on more and more. And I wanted to make sure that we did have an AI session on the docket for this year. And when we were first putting it together, to be honest with you, I didn't really know how it was going to go, what kind of use cases we were looking at. But as we go along and more research has come out, we're trying to see, or I should say, we're starting to see how this is all going to play out down the road. And points 2 and 3 kind of play into each other here. And I'll go with the AI particularly right now and looking at some of the simple things that it does, just in terms of the conversations that you see in chatbots. And if you look at something like Erica from Bank of America, that is really the first full-scale thing that we've seen in the US for how there's this assistant that's in a mobile banking app and you can talk to it, you can type to it, and you're trying to figure out simple things like bank account balances and when is a bill due and things of that nature. Now, the next step in that, and this was something I was talking to somebody at Javelin about, and I can't remember the person's name off the top of my head, but if you look up the article about Erica that I did on Mobile Payments Today, you'll find what I'm talking about. At what point do we get to a situation where I can ask Erica, okay, I want to load my debit card into Apple Pay or into Samsung Pay, but before that, I want you to tell me why it's a good idea for me to do this. Why should I be involved with mobile payments or making a mobile payment? I think that's probably going to be the next iteration of what we see from AI, that there's this deep integration to where we get to these conversational pieces that we can basically have with a machine. Now, we're not there yet, and I know things like Amazon Alexa and Siri and other things that are out there, Google Home, are slowly improving. But I remember a panel we had about chatbots at our Mobile CX Summit last year and how some of these things are still clumsy. Even Subway has even seen, and they were on the panel, about how people are interacting with the chatbot and even asking about weather as they're giving their order. So it's kind of weird. It's kind of weird human behavior that we don't really account for. And that's going to be the key going forward, especially when you look at, okay, what is AI going to do for the customer experience? How are the systems going to know, hey, this person has pretty good credit. We think we've seen them going to Home Depot a lot or Lowe's a lot. And how can we take that information and tell them, hey, are you looking for a mortgage? Are you looking for anything else of that nature? And I think that plays into the next point and the talk about data and the data that these banks are going to get from AI. Data is really the cash cow, I think, of AI. And that was the perception that I had as I was listening to some of these talks at BCX last week. And one interesting thing that came up during the AI panel, it was either that panel or another panel. Sometimes this stuff all blends together, but it seems like right now what's happening is banks have all this data, okay? They're accumulating all this data from different systems and different capabilities, transaction data, whatnot, whatever. And what's happening right now is that, at least according to what I heard at the conference, again, this is coming from bank executives, that there are two things that are happening right now. One, the banks don't do anything with the data. They're getting all this data and they're not taking advantage of that. And I can tell you in a minute how that's a mistake. Two, they're not doing enough with the data. They don't know what to do with it on a full, a comprehensive level. So it's either they're not using it at all, or they are using it, but they're not using it to their full potential. And the problem, I think, where that is that if you're not using that data to its full potential, when I mean full potential, I mean, okay, what kind of loyalty offers are coming from your bank, or what kind of mortgage or credit card or offers are coming from your bank? The problem is that if it's not coming from the bank itself, it's going to come from other sources, those other fintech sources. And I'll give you a perfect example. Myself, I've actually taken out one of those loans from a lending club. I had a situation a few years ago where I needed some money because I was moving and needed to buy some furniture. So the only reason why I was able to get one of those loans, that I was aware of those loans, is because, fun fact, when you pay down your debt and your credit score rises, I don't know what that triggers in terms of offers or whatnot. Don't ask me. I don't even want to know. It's kind of scary. But guess what? Somebody knows about that. And that's when the offers start pouring in from outside sources that are your bank. So I did not even think twice about going with somebody like a lending club, because at that point I had already known about them, okay? And I just thought the process through the bank was just too complicated. It might not have been, but when you look at a lending club, how quickly they get things done and how easily that's done online, well, why go through my bank when I can go through this other portal? So that's what I think what the problem is, where if your bank cannot recognize your credit history or your transaction history or things of that nature, they're definitely missing out. And the same thing happens at retail. You go to a retailer, you're going to a CVS, you're going to a Walgreens, and they know what you're buying because you're entering in your loyalty card number before each transaction. So they can come to you with somewhat targeted offers. I mean, CVS doesn't really do the best job of that, but they do a decent job of it. So they're coming to you with relevant stuff. That's not really happening with my bank, at least. So that's a situation where the data, as the AI gets more intelligent, I hate to say it that way, but it's true. As the AI gets more intelligent, and as the data gets better, and as people get more serious about using the data, I think that bank can become a hub of sorts, just in terms of loyalty, just in terms of other financial services and things of that nature. So we're getting there, and it seems like banks are more serious about that than ever before, but we still have a little bit of a ways to go there. And one of the last things I wanted to touch upon here in my wrap-up was just the idea of faster payments. We had a panel about that, and it's something that's still relatively new in the U.S., just to talk about it, and how the clearinghouse has these plans to get faster and things of that nature. I've got to be honest, I'm still a little bit unclear about exactly what's going on there. But one thing that I did learn at the summit was that Japan was the first country to have faster payments, and they started doing it in the early to mid 70s. Think about that. The early to mid 70s. I'm almost 40. I was born in 79, and by the time I was born, Japan had already had faster payments for a few years. And it's just amazing. It kind of blows my mind how that was going on back then, where we in the U.S. don't have that yet. It's 2018, and we don't have that yet. We are one of the few countries, major countries, just in terms of economic development and things of that nature, that does not have a faster payment system. And it boggles my mind that we're not at that point yet. But the Federal Reserve is working on that, and there seems to be some confusion over what's going to happen next there. And that was discussed during this particular panel. Now, as far as how that stuff is going to affect the customer at the end of the day, we're already seeing it. We're already seeing it with Zelle, how it's account to account. and it happens basically instantly. So we're already seeing that, but we're seeing some things, some initiatives from the clearinghouse and others. And I think what the Fed is basically, what people are waiting for the Fed to do is, okay, what's the system that we're going to use to do faster payments? And apparently they took a bunch of bids from these companies that are involved there about basically what system that we're going to use going forward. And it seems like the one from the clearinghouse is the one that we're probably going to use. I don't know if you should quote me on that completely, but it was a little unclear from the panel exactly which direction we're going to go in. But it's going to happen. It's going to happen by 2020. So again, it will be interesting to see how that all plays out. One more thing that I think I should bring up from the actual summit itself, and it was something that one of the keynote speakers said, Phil Leininger from USAA, and he actually said it during our rapid fire roundtable session where we basically had 3 executives and myself and Suzanne went back and forth asking questions just to get their opinion on certain topics. And one of the things that Phil brought up was this idea of the subscription service. And we're seeing this more and more, whether it comes to smartphones or content, where you're paying a monthly fee for something, or you're paying a monthly lease amount, I should say, for your smartphone. And I thought it was really interesting that he brought that up, because I'm not sure how you translate that into the banking industry. I have an idea, maybe for mortgages, you make that a little bit more fun per se, or other services. But one thing to maybe keep in mind is mobile banking. And there's been a lot of discussion in recent years about whether you charge for mobile banking, because it's free. It's a free service right now. And I think what's more likely to happen in the future is that you have a free mobile banking service and you have one that is paid, to where if you're paying for your mobile banking service, you get some additional perks, but not so much that there's a complete huge advantage to paying versus not paying for mobile banking. What that looks like at the end of the day, what those features look like at the end of the day, it could be something as simple as advanced personal financial management tools. It could be offers. It could be exclusive credit card offers and low interest rates. It could be some advantages when it comes to testing out certain features, or mobile payments of some sort. So I think there's a potential to possibly get a revenue stream from mobile banking, and I don't think banks really are making any money from mobile banking. I could be wrong. I doubt it. I really doubt it, actually. But there could be a chance in the future to have a premium service like a Netflix, like a Spotify, where you're paying, I don't know, $5 extra a month to access more features through your mobile banking application. Again, it can't be so much that there's a huge difference between free and paid, but it should be enough to entice the customer to slap down that $5 a month. And it's going to come out of their checking account anyway. I mean, why the hell not? Just something simple. And I was going to jump in when Phil said that, because right now Microsoft, and I'm thinking about all these things where it applies to now. Basically, Microsoft right now, if you go to the Microsoft store, you can basically lease a new Xbox One X console for, I think, $34 a month. And it's interesting because in this day of digital, you actually have to go into the store to make that happen. So maybe this is a situation where, okay, in order for you to sign up for this enhanced mobile banking, you have to come into the branch first. And maybe that's an opportunity for the banks to upsell their customers, or do like a financial check-in, or just a check-in in general, where, hey, you seem to be willing to come in to pay for the service. why don't we just sit down a bit and you tell us if we're doing anything wrong or you need help with anything or how better can we service you. So I think that's definitely one thing to keep in mind. Again, there are far smarter people out there who can figure this stuff out, and I'm sure at the end of the day they will. And if they're not thinking about it right now, I would be shocked to learn that that's not the case. And on that note, that's going to do it for episode 11 of the Mobile Payments Today podcast. I promise that next week we will try to get back to the normal Q&A and our normal editor's corner, because I don't know if anybody wants to keep listening to me for 20 minutes every single week babble on about my impressions of what's going on in the banking space at the moment. In any event, don't forget to check out Mobile Payments Today online and on Twitter. We are at Mobile Pay Today. Again, that is at Mobile Pay Today. And if you want to follow me on Twitter, don't forget to do so at W_Hernandez16. Again, that is W_Hernandez16. And again, do us all a favor and rate, review, and subscribe to the podcast on your favorite podcast platform of your choice. That helps us out, and we will be back with you next week. Thanks a lot. Take care.